Hey, this is Warren Redlick. I'm wearing the Critical Thinking shirt. Latin for critical thinking is discriminate cogitandi. I want to talk to you about Lucid Motors with a critical eye. They just had their Q4 earnings call. They just had their SEC filing, which revealed some huge bombs. Are you ready? Let's go. The biggest news for Lucid Motors is the SEC filing was filed, and we got a chance to take a look at it. There's a lot of details in here. I got a few key points here. We're not going to go through a lot of this. And you can see on the Lucid website which documents have been filed. Some of this is not that important, but what we're talking about right here is the 10K. This is the annual filing. This is the thing you file at the end of Q4 that provides a comprehensive overview of the company for the past year. This provides more detail than what was in the presentation slide deck we looked at during the earnings call. And this is the big bomb. This is like the biggest bomb of all from the slide deck. This is unbelievable that they said this. We do not expect to achieve positive cash flow from operations for several years, if at all. Let me say that again. We do not expect to achieve positive cash flow from operations for several years, if at all. Now, a lot of people are focusing on the if at all. The if at all is just, hey, we may never make money. That's an if. But they do not expect positive cash flow from operations for several years is the thing I think people should be focusing on. Why do I think people should be focusing on that? Because this is the Lucid Motors slide deck, and you can see right here, free cash flow. This is cash flow. And you can see that they projected, this is from May of 2021. This document is actually from July of 2021. This is the slide deck that went along with the SPAC merger. And they said they expected positive cash flow in 2025. Well, we're in 2022 now. Several years is after 2025. It's probably after 2026. So we are looking at Lucid saying we might achieve positive cash flow in 2027 or later. They've pushed making money off for 2 years or more. So if you're an investor and you bought stock in 2021 with the idea that this is a company, if you are a long-term investor and you're thinking this company's going to be successful, they're going to start making money like they say they will in 2025, according to their SPAC merger documents. Okay, I got to hold this stock for 3 or 4 years, and then I'm going to start making, the company's going to start making money, and the value of the company is going to become real, and it's going to become a valuable company. Now you invested money in 2021, and you're looking at 2027 or later. Now your time horizon is 6 years instead of 3. This is a radical change for long-term investors, and the company's saying we're not going to make positive cash flow for several years. They said it in 2022. You got to go at least 4 years out, really 5, because 3 or 4 is a few, right? So several is 5 or more. That's my take on several. Several is 5 or more. I'm trying to use critical thinking here. Several years. So 5 years, 6 years, you're looking at 2027, maybe that you're making money on your stock. And there's so many bad things that can happen. We've got a looming potential recession. We've got potential war. There's all these things that can dry up capital markets, so you can't raise money. This goes along with their announcement that they're reducing their forecast for how many vehicles they're going to produce in 2022 this year from 20,000 to 12 to 14,000. And if you listen to the earnings call, what they said was they do not expect to significantly ramp production until the second half of the year. So we're in March now. They're not ramping yet. On their numbers, they delivered 125 customer deliveries as of December 31, 2021. We don't know how many of those were employees and board members and delivered to internal to the company. We don't know that, but let's give them 125 customer deliveries. They're saying over 300 customer deliveries to date. That's 2 months. They deliver 200 cars. That's 100 cars a month. That's a pace of 1,200 cars a year. So if they're not significantly ramping production until the second half of the year, that means through 6 months, they will have delivered 600 more cars for the year. 600 cars for the year. That means in order to hit 12,000, they got to ramp to 11,400. They basically have to 10x their production in the second half of the year. This really doesn't look good for Lucid. This is a bad look. And I did a poll on Twitter. I didn't save it here. I did a poll on Twitter. Nobody thinks they're going to make 12,000. Nobody thinks they're going to make 10,000. The longer it takes them to scale production of their vehicles, the longer it takes them to become profitable. There's this awful. It's sort of like the tyranny of the rocket equation. You got to make vehicles to make money, and if you can't make vehicles, you can't make money. And then over here, by the way, they surpassed 25,000 reservations for estimated potential revenues of $2.4 billion. I think that's $96,000 a car, up from $90,000 a car in the past. So they're getting more reservations for cars. But 25,000 reservations is not a lot. And if you're going to make 12,000 cars this year and you're not going to deliver the Pure, which is the high volume version of the vehicle that you're going to sell at a lower price, if you're not going to deliver those till the end of the year, maybe these people are waiting a long time. Are they going to cancel? Are they going to wait for you? I don't know. Another big deal that I saw in the SEC filing was that they have an agreement to spend $804 million to purchase battery cells over the next 4 years. That works out to about 70,000. I came up with 67,000 vehicles. You divide by $120 a kilowatt hour, and you divide by 100 kilowatt hours per vehicle, and you end up with about 67,000 vehicles, which works out to about 17,000 vehicles a year for the next 4 years. So either they don't have enough contracts for batteries for their expected production in the future, or they don't really expect to make that many vehicles in the next 4 years. Very, very interesting detail here. Where are they going to get the battery cell? If they do scale production, where are they getting the battery cells for scaled production? Or does this indicate we don't really expect to scale production? I mean, this is a big hole. This is a big question. I don't think it's that easy to secure additional batteries. Just because you have a contract for these batteries, it can get hard to get batteries. There's a lot of demand for nickel-based cells, and they're using nickel-based cells. They're using nickel-based 2170 cells. I can think of at least one other company that has a high demand for 2170 nickel-based cells. Tesla. Are you going to be able to secure more cells if you succeed in ramping production? Are you going to have problems with that? We don't have an answer to that. Another big bomb in their earnings call, they mentioned the CEO restricted stock awards in the earnings call. When you look in the SEC filing, what you see is that this is restricted stock units. The CEO, Peter Rawlinson, gets restricted stock units. And the board of directors approved the grant to Rawlinson of restricted stock units based on performance and service conditions. This is really striking that the time-based RSUs, the performance condition was satisfied upon closing the merger. The CEO performance RSUs, the performance condition was satisfied upon the closing of the merger. He's getting paid for closing the merger, not for producing cars, not for delivering revenue. Same thing here. The market conditions will be satisfied based upon the achievement of certain market cap goals. And wait a minute, what were those market cap goals? The market capitalization condition was met for 4 of the 5 tranches of the CEO performance RSUs, representing 14 million performance RSUs. He got 14 million shares, which at $20 a share, I think it's $24 right now, that works out to about $300 million or $240 million in stock. And they charged that as $85 million. They took an expense of $85 million, giving Peter Rawlinson $240 million worth of stock. That's an interesting little detail, but it's really striking that the conditions of the CEO Performance Award related to getting the merger closed and getting the stock price up. They were not related to producing cars, delivering cars, getting revenue, making profits. None of that was a consideration in Peter Rawlinson's pay package. His pay package was based on getting the merger closed and raising the stock price, pumping the stock. He has no incentive in any of this to produce revenue or to produce profit or to sell cars. It's a striking pay package. They're paying him to pump the stock. This is stunning. They're paying him to pump the stock, and it worked. He pumped the stock. Just another note here, the company now has 3,900 employees as of December 31, 2021. Maybe they're up to 4,000 employees. They've got 4,000 employees, and they're struggling to make 100 cars a month. 100 cars a month. They're struggling to make, they've got huge problems. In the earnings call, they talked about that the supply chain issues, we knew there were supply chain issues in July of 2021 when you did your SPAC merger. This is just ripe for another class action lawsuit. What did they know and when did they know it? They had to know there were supply chain issues in July of 2021. The ongoing crisis had been going on for a year and a half at that point. They had to know this was an issue, and they still claimed they were going to sell 20,000 cars in 2022. They haven't issued guidance for 2023 and beyond. They said they would issue guidance in Q4 of 2022 about 2023. Their Q4 guidance will be probably when they do their earnings call in late February or early March of 2023. So we're not going to get guidance on 2023 until 2023 has already started. This is a company that keeps putting off the future. It's really, I think one of the biggest things to me is if you believe in Lucid Motors, the idea that they are going to invest in their company and grow their company, okay. But if you're going to invest and grow your company, then why aren't you investing? Why aren't they building up? Why aren't they building? They're not investing as fast as they should be to achieve their goals. And I think they've gotten to the point where they realize we've got a cash flow problem. And they're actually holding off on investment. One other thing I wanted to mention here is that there's these additional documents, information on directors, executive officers, and corporate governance, executive compensation, security ownership of certain beneficial owners and management, relationships and transactions, and principal accountant fees and services. All of these are delayed to be filed within 120 days after December 31, 2021. For some reason, a bunch of documents that they are waiting for these documents, and these documents will not be filed with the SEC until end of April of December 31, something like that. I'm not sure how important that is, but it just seemed odd that you would wait 4 months to file certain documents that are related to your annual report. Don't they have enough accountants? You got 3,900 employees. You brag about your team. You don't have enough employees to get this done. It just seems questionable to me. The other thing that struck me about what happened for the Q4 earnings call and the news surrounding it was the announcement that they're going to build a factory in Saudi Arabia starting this year. Although the factory won't be completed till 2025, it just seems like a really odd decision. We heard a lot of rumors that they would build a factory in Saudi Arabia. There was this claim that it's worth $3.4 billion in value to the company over 15 years with no explanation of what the $3.4 billion is. What do they mean it's worth $3.4 billion? Where does that money come from? Does that mean the Saudis are giving them $3.4 billion? No explanation of the terms of this agreement, which if you're communicating meaningful information to shareholders, you should be communicating that. Now, of course, the Saudis are roughly 2/3 shareholders in the company. I forget whether it's 63 or 62% of the company. Maybe they don't care, but this is not meaningful disclosure to shareholders. Shareholders are entitled to know what's going on here, and they don't know. I'm not a shareholder. I'm not a short. I'm just a critical thinker. I'm watching Lucid Motors. Why Saudi Arabia? I understand they're investing in Saudi Arabia because their biggest investor is Saudi Arabia, but this seems like an awfully dumb place to build cars. They're talking about potentially building 150,000 cars a year in Saudi Arabia, where Saudi Arabia and the Arab countries around Saudi Arabia do not have the demand to support 150,000 cars. So where are you going to export them to from Saudi Arabia? It's not really an ideal location for exporting to customers nearby. India doesn't have a big enough car market for that. Africa doesn't have anywhere near a car market for that. Are you going to send them to China from Saudi Arabia? It's kind of like the oddest idea ever. We're going to build cars in Saudi Arabia and ship them to Europe. Are you going to ship them to Europe? Is Europe the destination for cars built in Saudi Arabia? This is just an out there concept. And then is Saudi Arabia really a good place to build cars? They don't have a history of building cars. They have an employee base to build cars. They're probably going to have to import employees from the Philippines and India and the Palestinians. Who knows where they're going to get employees from. Regular Saudis probably aren't going to work in a car factory. They're generally wealthy people. So how are you going to build this factory? Where's your supply chain for this factory? There's so many potential problems. You're going to have to ship parts from far away to Saudi Arabia. It's a very, very, very odd decision. And if I were a long-term shareholder, and I'm not, I would be thinking, what's the strategy here? This doesn't seem like a wise strategy. It just doesn't. I know the Saudis are trying to build this economic city, and maybe they're getting a lot of subsidies for it, but it's just not a great location to build cars. Do engineers you're going to need engineers to build this factory, to operate this factory. Do engineers want to live in some city in Saudi Arabia? It's going to be very hard to attract quality people. I think ultimately we're all rooting for EV companies to succeed, to see a transition to electric vehicles. I can't root for Lucid because I feel like they've been lying to us for so long, and they wait until the last minute to reveal the fact that they've been lying to us, and here's the new numbers. Very disturbing. They're still hiding numbers for until the end of April. A lot of bombs here, but the biggest bomb, let's just go back to it, just to close this out. The biggest bomb is we do not expect to achieve positive cash flow from operations for several years, if at all. Okay, leave aside the if at all. The if at all is lawyers being careful with language. but we do not expect to achieve positive cash flow from operations for several years is really bad. For a company that said it was going to be positive cash flow 2025 to say now we don't expect to be positive cash flow till 2027 or later is just bad. That's bad for shareholders. It's stunning that the stock hasn't fallen more. As I look at it, the stock is now down to $23 a share, $22 a share. It's fallen substantially, but we're still talking about a $38 billion company that is struggling to make cars. You know, people say, well, it's not fair to talk about Lucid this way. Look at, where Tesla was when they had their IPO. Yeah, Tesla was valued at $1.7 billion at their IPO. And they had already made more cars than Lucid has made to date by a lot. Lucid is valued at $38 billion, which is 20 times what Tesla was valued at when they had their IPO. How are you possibly going to achieve your goals? And then if you push out your production and you push out commercial success far enough, there's so many things that can happen in the marketplace that can undercut your potential to succeed. A recession, an inability to raise capital. The Saudis decide, you know what, we're gonna give up on you. The danger that Tesla achieves robotaxi and the market for cars radically changes in a world of robotaxis. So many different things get thrown. Mercedes succeeds in making a better EQS. Porsche comes up with a next generation Taycan. These vehicles compete with the Lucid Air. Somebody comes up with an EV that's highly competitive with the Lucid Project Gravity. Are they even going to achieve Project Gravity? They pushed off Project Gravity to 2024. That's another thing that they pushed off. They keep delaying success, and when you delay success, you may mean success never comes. So my take, if I were a Lucid shareholder, I'd be worried. I can't tell you to sell your stock. I can tell you, when are you going to make profits? Like, if you bought stock today, let's say you bought the whole company today for $38 billion, and they said, hey, in 5 years, we're going to make $1 billion in profit. We're going to have $1 billion in positive cash flow in 5 years. Is it worth $38 billion today to buy a company that's going to make $1 billion in profit 5 or 6 years from now? It doesn't seem like a good investment. I'm not qualified. I'm not offering financial advice. You got to make your own decisions. To me, a company that might make money at some point in the future, far off in the future, a company that is delaying success, it's delaying investments, and then it's making this bizarre investment in Saudi Arabia. We understand why Saudi Arabia, because the Saudis are funding the company, but that just doesn't seem like a good long-term strategy. I can't tell you what to do. I can tell you I'm still Lucid Q, LCIDQ. You can check out the LCIDQ t-shirt and the Discriminate Cogitandi t-shirt at elonbits.com. Please check out my other videos. Support this channel on Patreon. Join the Daily Lie on Locals. Links to all that in the description below. And thank you so much for watching.